My name is Associate Professor Asheer Ram, and I'm a member of the Margot Steele School of Accountancy at Wits University. Thank you very much for joining me. In this video, we're going to be considering the potential South African wealth tax and whether it actually is designed to collect revenue, as is purported, or whether there's actually some more sinister reasons behind its possible future implementation. We're going to consider effectively, is the wealth tax a panopticon? But before we get there, let's consider the South African landscape. In terms of economic and income inequality, we know that South Africa ranks among the highest in the world for this type of inequality. This is shown by the Gini coefficient, which stands around 63%, which is higher than any other country. We have a low GDP forecast. There's been some shortfalls in terms of tax collection. And there's studies that say that South Africans are overburdened with taxes, with around 1.8% of registered taxpayers contributing up to 28% of personal income tax. And there's quite a big discrepancy there. In South Africa, we also have estate duty and donations tax, which could be considered taxes on wealth of individuals. And in a South African context, there's also other factors that affect the tax climate and the economic climate, being immigration of skilled professionals. People speak of the so-called brain drain. There's corruption issues around how tax resources are spent and used by governments. And there's also been studies that consider whether there's perhaps a potential tax revolt that's possible by South African taxpayers. So against this backdrop and understanding this South African context, we need to then consider, why has there been these discussions by government about a potential wealth tax? It's something that has been on the ruling party or previous ruling party's agenda, and it comes and goes sort of, I suppose, as politics come and go. But let's consider now an additional wealth tax in a South African context. What could that look like? Well, this is what the government is considering, right? It would be a type of net wealth tax that's beyond just your estate duty, which is tax on your property at the time of death, and beyond just donations tax, to say what is your net asset value effectively, and a tax being levied on that. So that's the tax that we're looking at here. It doesn't currently exist, but potentially it could be introduced. Now, South Africa is not the first country to consider a wealth tax. It's interesting though, because studies have shown that a wealth tax generally does not generate large tax revenues and is most of the time administratively unfeasible, where effectively the costs of collecting the tax tend to be greater than the benefits that the fiscus is generating by maintaining or by levying this tax. If we consider other countries like Austria, Denmark, Finland, Germany, and the Netherlands and Sweden have all had wealth taxes at some point in time, but have repealed or removed the wealth tax. Now, those are typically developed countries, but if we consider countries like Colombia and Spain, which may be considered to be developing economies, they do have some type of wealth tax. Together with France, Switzerland, and Norway, have a wealth tax in some shape or another, but typically on a net asset to asset value basis. So it is interesting that globally there is no consensus, as we can see, on whether a wealth tax is something that works and whether it should be implemented. Now, again, in a South African context, let's look at what information we have at the moment in terms of what could it look like. Well, effectively, as we said, the South African wealth tax is a tax over and above other taxes. And this is sort of exploring the characteristics of a potential South African wealth tax. It's over and above normal tax, VAT, estate duty, donations tax, transfer duty, etc. And the wealth tax is going to be a targeted tax. It's levied on those who can pay. So it's focused on high net worth individuals. And well, how do we know this? SARS has, in the past few years required, SARS being the South African Revenue Service, has required certain taxpayers to declare to SARS the market value of all their assets if their assets exceed an amount of 50 million rand, presumably market value exceeding 50 million rand. This can be viewed as sort of a start to be getting information about these high net worth individuals. So that there's a specific disclosure requirement for them. The tax would be on worldwide assets or worldwide property. It wouldn't just be South African assets in terms of how it would be applied. There's no exemptions that have been mentioned. Many taxes have exemptions which reduce the amount of tax payable, but the wealth tax as it stands is unlikely to have these types of exemptions. And together with that, it's interesting that our government and Treasury and SARS has entered into sort of reciprocal agreements with many other governments around the world to exchange information about high net worth taxpayers. So even though a taxpayer may feel like they could avoid this potential wealth tax by taking assets offshore, that government may provide SARS and Treasury with that information, and therefore it would fall within part of the South African tax net. So it's important to understand these reciprocal agreements. We've spoken about the requirement for disclosure by these high net worth individuals, but sort of underpinning all of this is that there's an expectation that the wealth tax would still be quite administratively heavy from a burden side and costly from a resource point of view, because you would need resources from a SARS perspective to be able to ensure that the disclosures are complete and that the values being provided by these taxpayers are correct and the valuations have been carried out correctly. So you need very specific valuation skills. The types of assets may be not typical shares, maybe there's paintings involved, and you'd need information and ways to understand how those are valued. So from a resource side, there are some concerns. Now, let's sort of change our view, and we've considered what the wealth tax could look like if it is implemented based on sort of current information. At the start, I said that we want to consider actually whether this wealth tax is a panopticon and not just a means to collect additional revenue. Well, I'm sure you're asking, what is a panopticon? Now, at this point, we harken back to sort of the 1700s. We look at the work of Jeremy Bentham in 1787 that was popularized by a French philosopher, Michel Foucault, into this concept of a panopticon. But let's simplify. So if you can, I'd like you to close your eyes and envision a central pillar that is surrounded by a structure. And now imagine this structure as a prison. So at the center of this prison, you have a single, let's call it guard tower. And in the cells that are all around this guard tower, you've got prisoners. In the center, you have a single, could be many, or you have a warden, you have guards. They are able to see each prisoner from the central tower. So envision looking out from the central tower and you're able to look through each prison cell. However, the reverse is not possible. Because it's how it's built and the lights that are shining outward, the prisoners are not able to look well, they can look into at the tower, but they're not able to identify if there's anyone there who's viewing them. That is the sort of physical manifestation of the panopticon. It is a system that's designed to gain information about a person, in this case the prisoners, without that person being aware that they are under surveillance. It's designed to subtly work on the subconscious of the person being observed so that they know they must behave. And whether they're under surveillance or not, they're not quite sure, so they want to be on their best behavior. The prisoner must follow the prison rules, and if they don't, then they will be subject to what we call sanctions. Now, so that's the physical manifestation. So if you close your eyes, you're welcome to open them again. It's important to understand that over time, we've moved from, and because of the work of Foucault, we've moved from just understanding the panopticon as this physical construction, but more as a psychological effect and a psychological apparatus, so to speak. So under the Foucauldian theory, the panopticon exists as a means to discipline a person. So from the prisoners, now we consider, can it be used as a means of disciplining or keeping taxpayers in line? So that's kind of the thrust of this. But let's further break down this sort of psychological aspect of the panopticon. We can separate it into 4 different elements. There's enclosure and partitioning, which we saw with the physical prison. There's what we call the efficient body, which is making sure that through training, the people or the prisoners, they follow a certain code of conduct, they behave a certain way. There's hierarchical surveillance, which is an important component of the panopticon. There must be some type of, big brother or eye in the sky type system. And that must be coupled with normalising sanctions. So if there is misbehaviour, if there's behaviour that does not conform, that does not match what discipline is expected, there must be a normalising sanction. So sanction, a negative impact, so some type of fine, penalty in a prison, there could be physical impacts possibly. Normalising, that word is important because the sanction is not just a sanction or a penalty for its own sake. It's designed to bring the behaviour back to the normal expectation. So it's a normalising sanction. Now, we can sort of break each of these elements down, but I think it's important that you understand that these various 4 elements: the enclosure and partitioning, the efficient body, so the training of the taxpayer to behave in a certain way, the fact that they're under this gaze, and the fact that if they act out, they will be subject to normalising sanctions. So we now need to sort of understand that in terms of a tax context. So that's the panopticon. We've spoken about the wealth tax. How do these two fit together? Now, maybe before we get to the specifics about the wealth tax, this concept has been, not commonly, but has been applied in a tax context in certain instances. So, for example, San Juan in their 2018 paper looks at the United States of American Tax Authority, the Internal Revenue Service, and in their paper, they liken the IRS to a fiscal panopticon. They speak about the automation of tax systems, giving the IRS wide information gathering powers. They state that the voluntary compliance with the IRS and the American tax code is coerced beyond the actual enforcement abilities. So the IRS can enforce, compliance with the tax code, but because of how it's structured and because it effectively acts as a fiscal panopticon, the compliance is more than they would be able to enforce given their resources, which I suppose is interesting given the recent government shutdown in the US. It remains a topical, point of view to say that, well, if the IRS shuts down, how are people going to comply with the tax code? In Australia, Williams in 1992, which is quite a while ago, but they spoke about how a disciplinary system is created for taxpayers. I think, we understand that if you don't comply with taxes, there will be fines and penalties, but the use of technology and the surveillance has also made that, the application of the Australian tax laws by the Australian Taxation Authority Office, ATO, has made it more achievable and more applied. In Canada, they had a similar look, and they said that the activities of the taxpayers are made visible because of the information that the tax authorities can gather, and therefore it makes them subject to discipline. So you can see that it's not only in a South African context that the question has been raised. Coming back to the thrust of this discussion, my question was then, well, given that yes, many countries have repealed or abolished the wealth tax, it perhaps is not so feasible. In South Africa, there's other questions around whether the resources gathered from the wealth tax will be used responsibly and effectively. Why is there this push that, as I said, comes and goes over the years, but why is our government talking about a wealth tax? Well, I argue and contend that the wealth tax is not just to create or give rise to further revenue. It does share traits with a panopticon. It will identify, reveal, and coerce specific compliance in the high net worth individual taxpayer group, because it brings this information into light that may not have been available before through its intended functioning. The use of the wealth tax as a panopticon, I think, presents another justification for its potential introduction into a South African tax sense. It may not, of course, be the intended intention by Treasury, by the government, by SARS, but I think there's no denying that it does have these elements. And on an overall basis, I think it's important that we're sort of designed or trained to accept tax as inevitable, as Benjamin Franklin supposedly said. The only things that are certain in life is death and taxes, and then the two together at some point, which is interesting. But I think this discussion for me is important because it adds a critical thinking view to the potential wealth tax as a panopticon. I think it's important that we do critically consider these taxes and why they're being brought in order to understand them from a different way, and we sort of don't just accept it as it is given. And I believe that the use of the panopticon is an important device, and I think it's important that we understand it, given AI, we just spoke about in another video, that gives maybe more information gathering powers, and the use of surveillance by governments and tax authorities, that perhaps it is actually at the end of the day really just another type of panopticon. And I suppose the word panopticon is also interesting. Pan meaning wide, opticon, ocular, or being able to see, so having a wide view. And I hope that this discussion has perhaps opened your eyes a little. But yeah, so once again, thank you very much for joining me, and take care.